All right, so let me just explain what it is. All right, so this is how my chart looks like. We need you can use all of these indicators. All right, so the most important ones are your chart on your MT5, cumulative delta. How to add it is simple. When you install cluster delta, it's simple, and you log in to it, you add the indicator to your MT5. You're going to see list of indicators here. Um, so these are all the footprints indicators, and the one we need is just this one. So I don't like this noise. Let me just reduce the volume. All right, the one we need is this. You can see cumulative delta, and I added both. So one is the bar and one is the line. So it's the same thing, but sometimes your eyes may be not able to see the chart properly. Sometimes it might be the line you want to see how it's formed. So this is RSI, and this is ATR, average true range. It's for us to know our stop loss. Usually, if our stop loss, like right now, you can see it's saying 0.5, meaning the market's volatility is low. So we can use 0.5 stop loss, but no, it's best you always times it times 1 or 2. So if you see 0.5, you can use 10 pip. If you see points, you can either use 10 pip, that's point times 1, or you use times 2 it, which would be 15 pip. I usually like sticking to 10 pip. Then we're doing New York when the volatility is high, check it. If it's more than one point something, if it's around one, like around here, maybe one, so it's best to just use like 1.5 or 2 or 20 pip for the stop loss. Then the take profit is always times 2. Then the break even is always 1 hour. All right. So remember our trading plan, we can make millions using that. Now moving forward. So now how do we use it? So let me just use previous trade. Let me use this. Let me use previous trade. So let's see. Let's go here. All right. So now on this is 1 minute chart. This is 15 seconds chart. All right. So you need the IFM indicator to mark your divergence. So, for example, like this trade, this was where this is a current chart. So once you see a divergence, you have to get used to it. It's not something I can teach you how to see it. You have to like play with it to be familiar. So divergence is always um, um, movement of price that is not aligned. You can see when we're using RSI, this part is not showing divergence because the current candle chart is going like this way, going like upward, and the RSI is going upward. But you see why this cumulative delta, which is important, this is very important. You can see how it's going downwards here. Boom. You can see how it's going downwards. So as it's going downwards, you can also see this also is the same thing, just that this is the line of this, the line chart of this. So sometimes I just want to see it on the line. So you can see it's going down, and the regular candle is going up. So once you see a divergence like this, what are you going to wait for? You're going to wait for a 1 minute IFM. Now, if price break below here, you're not gonna the signal is invalid. So you'll be looking for that's the last low for a bullish trade that gave you a divergence. Like right now, like currently now we are having a so there's no trend. So you have to know, are we buying or selling? Like here now, if you say we're selling, it's also going down. So we're not selling, it's aligning. But if you say we're buying, this is going up, this is going up, and this also is going up, so it's aligning. But if you use these other parts, if you use this other parts, I don't really like using this short movement. If you use this other areas, Then you can see here is also aligning kind of, so it's not really a clear signal. So it has to be clear like this. You can see so you have to use all the probabilities. But the reason why I just added the RSI is just to just gauge sometimes. Okay, if it's above 50 RSI, so most likely sell, but sometimes price trend will still be bullish and you can just pick up the retracement for the continuation of the bullish trend. Whilst most times to if it's above 50 RSI, it's going to sell. So you have in mind that okay, you're going to sell at the same time, you have in mind that you're going to buy if it gives you that. So sometimes it can give you both. So you choose which one you got to stick with. All right, so that is that. But adding this what's it called? Adding this 1 minute IFM after the was formed here, you can see here. So the IFM happened here, which was this candle. So how do you mark it? You're going to mark all of it. You're going to mark all of it. You're going to mark all of it from here to here. You're going to mark all of it. Then on the 15 seconds. So this can also work on any time frame, but because I'm scalping, right, I prefer to use the lower time frame. Then on this part, so let me just off these other indicators. Remember, we need the IB zone, which is the major doji candle. So now what we do, we want to see the major doji signal appear inside the zone. Once it appears, we're not waiting for break of it and retest. So once it just appear, that's our entry signal. So once that appear, we just take it. But this trade did not appear inside, rather it appeared outside. But you can see still the signal was still bullish. All right, so I think this was looking like this looked like a bullish trade. So if it's not that clear, just don't stress it, right? Don't stress it. If it's like now, this is like a sell divergence, right? And this is going up. This part is going up, but it's kind of flat and going up. But if it's not that clear, you don't have to stress it. Just wait for a clean one like this. Let me show you another one. This one was so beautiful. I don't know why I can't. This was so beautiful because see, price was moving up, but the cumulative data was moving down. So I just knew this was going to sell. I just knew it was going to sell. So you would say, why didn't I use here? You wait, give it space. So if you use here, it's not that it's just too short. So I want to give it a proper, like here now was from here to here. You can start from here to here actually. You can say from here to here. And let's see. Let's see that sell trade. Sell trades. Where is that? All right, so yeah, I remember I marked it here. I marked this area. So now what that happens now is that when I mark it, I just felt it was high risk, right? It's let's see. Let me go back. Sometimes you have to use your own guts, but it's a rule-based strategy. Once you see a divergence, check IFM. Once you see IFM, go to the 1 minute to look for a setup. So even like this is where you would have taken a most likely a sell before price actually took the high. So if price took the high, you wait for and it's still giving you a divergence, you can still look for a new setup. All right, so you wait for a new setup, but since here it's the most likely it's set up, so and here is about 0.7. You can see the ATR is 0.74, so most likely our stop loss will be 0.74, but remember make it like extra 1 point something, maybe extra 1.2 or thereabout. So but I didn't take, I saw it but I didn't take it. I just felt okay, it's not giving me a clear confirmation. So I want to see another engulfing. So the engulfing happened somewhere around here, and price did not give me any signal. So another one happened again here. If the engulfing keeps taking the high, and you mark a new engulfing, which is this one here, you mark a new engulfing. Let me just show you. You mark a new engulfing, and it still did not give me IFM. It broke it high, so I'm not going to take any trade. And then a new engulfing came here, this area here. All right, so now once I knew engulfing came in, and price came towards here and give me, and during that engulfing is still the cumulative data is still coming down. Why this was going up? So it's a sign of divergence, that price definitely going to come down. I just knew it was going to come. All this are just manipulation. Then I took the entry at this area. So this, so once you see this, you, and the stop loss is still ATR. Just use like either use 1 point. I just use 1.1. So you can see. So now at this point, you don't care if the engulfing takes that high, because right now you're on a trade and your stop loss is above. So you just wait. Once you are at 1 hour and there you break even, then boom, give it to hour. But price went deep down in profit. So you can see there was no any setup here, because price was just like aligning with the movement. It was going higher high, it was also going higher higher. So you have to take notes. Then same thing here, price came here, gave us a what's it called, gave us divergence. Chart is coming high and low, and here it's coming low and high, low and high, you can see. But if one is using all this retail indicator, you can see that it's still giving you the chart movement, but here is already giving you a signal. So that's why it's so strong. The win rate is crazy. We don't attach bias for this, because once we attach bias, we'll be restricted from taking buy and sell. So right now we don't attach bias. We just play with this. We freestyle, because that's how it is. Market doesn't give us straight direction. We just freestyle with it as it goes. So with this delta information, I think win rate has improved, made all the money, made all the losses I made from regular retail indicator method. So you can see this buy just went high. Let me see if I can see that one. Okay, yeah, this was it, and this was this one also. So let's see. So you can see, and also you can see the RSI here now, it's about below 50, so most likely it's gonna buy. All right, so um um so I mark the whole area of the engulfing. So what is the 15 seconds showing? Maybe if we want to trade higher time frame, maybe we use 1 hour engulfing, or 15 minutes divergence, 15-minute divergence, then uh, maybe maybe 5 minutes, um, maybe 15-minute divergence, 5 minutes zone, then 1 minute entry. That's like for a intraday trade. Maybe if you want to now take a swing, maybe 4 hours divergence, 1 hour, a 1 hour entry, or 1 hour entry, 1 hour divergence, 15 minutes, 15 minutes what's it called, 1 hour divergence, then 15 minutes zone, then 5 minute entry. So we use like two time frames. So one time frame for divergence, the other time frame for entry, another lower time frame for entry. All right, so any time frame you use, just divide it by let's say 3 or 4. You should get the right sequence. But currently I'm scalping, I'm just using 1 minute 15 seconds, 1 minute 50 seconds, 1 minute for the divergence, mark the zone, then 50 seconds for my entry. So this was it. So all of this price was just going, went high. I remember I had to see this and I saw it appear there. So this was my entry. All right. And boom, I took the trade and it did 1, 2, 2 and boom, I'm out. So remember the strategy of if so look at this. Forget about the 100%. I'm just explaining this. If we can achieve, if we can risk 25%, make turn our $10 to $30 maybe first day, or within 5 days, we can just the target is just make sure you're making 200% every day. Maybe you stop for the day. For or one of the accounts for this big account, you can say, okay, you can tell that, okay, what I'm going to do is that I'm going to target 200 to 800% in a day. Then once I achieve that for one of your accounts, you can stop. Then the other accounts, maybe you do time trades, maybe from 6 to 6, depending for that's UK time. Then whatever amount you make on the other on, generally you take it. Then for stop loss, maybe if you take 5 losing trades in that day, even it might not be in a row, maybe you had a lot of wins and you had some loss, and the total loss you can take for a day is 5, then you stop for that day. So these are just some trade managements that you can adopt. All right, so I hope this video helps, and take care.